All right, everyone, here we are with ticker symbol NIO, NEO Inc. And before we jump into this chart, welcome back to all my subscribers and to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. Before we jump in as well, I want to state how important this support level was, and it was actually used by the bulls. I believe they heard this video, they watched this video, and they made it run up. Nah, I'm just kidding. But really great job here by the bulls that they did not allow this to hit newer lows, because if that broke through that support, this was going to work its way down to newer support levels and newer lows. But it actually recovered really quickly from that, and the bulls definitely took advantage and not allowed the bears to bring this one down. They crossed the 50-day moving average, and the question is, will they continue this momentum? I mean, NEO has been in a very healthy run. It's been kind of sideways right now, but it hit newer highs recently, and that's exactly how NEO has hit newer highs. In a sideways, healthy run, obviously the volatility of the market, but it's always hitting newer highs over time. So NEO is showing a healthy trend, and we're going to have to pay close attention to what this is showing us for tomorrow. So this is going to be kind of narrowed down, and then we're going to talk about it a little bit broader. Now, the lowest point after this run and leveling off was way down here at 2079. I'd write it down just to keep it in mind for the next coming days, but I don't believe the volatility will change that quickly in a downward trend, because then that just signifies that profit taking is taking place, and this was just a small run and momentum, that there was no real bulls here, because real bulls will continue this momentum going, and a lot of investors will stay because they believe in the company and not just try to take profits that quick. But that's something to keep in mind. 2079. Now, our resistance levels and support have slightly changed, and this is a very narrow stretch here, so we're going to look at it very closely. Now, the 50-day moving average is 2141. I'd write that down. As long as we're above it, bulls are in control. The moment we're below it, the bears are starting to gain control. If this gets crossed, the bears have actually turned this one around, and we're now heading into bearish territory. But before getting crossed, the bears need to break through the first support level, and it's really close to the 50-day moving average. It's actually 2148. So there's that small window of uncertainty here. So I'd pay very close attention, and I want to emphasize this to every investor. How quickly is this moving closer to the 50-day moving average? Did it even cross the support and 50-day moving average within the same time frame or within an hour or two? And how quickly is it moving down? Because this could be on its way down to newer lows and newer support levels and get into bearish territory. Now, there's also the uncertainty that, yes, this could get crossed, and is it hanging out in between the 50-day moving average and the support level, and how quickly are the bulls trying to reappear and bring this one back up, because we're still in bullish territory until this gets crossed. Now, I just want to emphasize, pay very close attention to how the stock is behaving and reacting. Put your 1 minute, 5 minute, 15 minute charts to see what's going on and how quickly this is moving to hit newer lows. On the other spectrum, we have what the bulls want, and the bulls want to break through resistance. If they accomplish breaking through resistance, which is the highest point reached in today's run, is 2177. The bulls need to break through this so that they can continue the run. That is the one thing I want to emphasize, that the bulls need to break through 2177, turn that into a support, and by doing so, they can work their way up to newer highs and work further away from the 50-day moving average in an upward direction. So that's super important for the bulls to break through 2177 and go ahead and move further away from the 50-day moving average in an upward direction, so they can start to hit newer highs, new resistance levels, and work their way up deeper into bullish territory and continue this momentum. So we're going to have to see how that plays out for tomorrow. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button and let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart, and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.